everybody. This is Paul Hitchcock. I'm really excited to have Fred Dawes talking with me today. Fred, can you hear me okay?
I sure can, Paul. Good to see you and looking forward to this conversation.
Yeah, thanks for being here. This is an important topic. I get a lot of questions on this, and it's how do I know if I need to make quarterly tax payments? So Fred, how would you answer that?
Well, there's two different points of time in which a person would need to make estimated tax payments. We got a proactive and a reactive time period. So let's start with the reactive time period. So let's say you file your tax return with your accountant or with TurboTax or however it is that you file your tax return, and you find that you owe $1,000 or more on the tax return. So you're in an owing situation versus being in a refund situation. At that point, you would be required by law to file quarterly estimated tax payments for the next year. And simply put, there's a couple different calculations, but the amount of money that you were deficient for that year, plus any amounts that you made for extensions or anything else, you would add those amounts together, you'd divide that by 4, and that would be your estimated tax payment. The IRS would like to receive the money on a quarterly basis prior to year end. So that's the reactive part.
Okay.
And the proactive would be you have an accountant, and your accountant and you are sitting down going over your taxes, and you have a conversation about additional monies that you're going to make in the next year, and the accountant figures out that this may be a business, or maybe you're selling selling an asset or something which would be taxable. So in that situation, being proactive, you would decide to make estimated tax payments with the accountant in order to not owe the IRS the next year. So that would be the more proactive approach.
Okay, so I always thought that it was maybe just 1099 people that needed to make the estimated and quarterlies, but you're saying it not necessarily just 1099 folks.
That's right, Paul. Sometimes we sell assets. Let's say you decide you're going to sell a car collection or something to that effect, or you're going to sell some stock that you have in your brokerage account. You may have a large capital gain of which there hasn't been enough money withheld from, let's say, your paycheck or 1099s that you may have had. There's not enough money withheld to handle that tax that would be caused by the other income.
So that really gets into the fact that the tax system we have is a pay-as-you-go system. So you got to, it's not just wait till the end of the year, pay everything. It's really a pay-as-you-go.
Yes, absolutely, and it's best that you stay on top of your taxes. Tax forecasts are one of the things that we offer at our firm, especially for business owners or high net worth individuals. We keep on track with the earnings that our clients make, and then we usually schedule them even more frequently on a monthly basis to ensure that cash flows meet the income that they're making. So when you make income, you have money to pay your taxes. So if you made, let's say, $10,000 this month, and we're going to put $2,500 into the IRS, it's a lot easier for you to do $2,500 than to multiply that times 3 and do it quarterly at $7,500 when you've only brought in $10,000 for that month. So sometimes it's a great budgeting tool as well.
Right. Yeah, I think that's the great takeaway. It's a budgeting tool, tax planning tool. You've got to get into it. Fred, as always, fantastic information. Thanks so much.
Thank you very much for having me, Paul.
Okay. See you next time.
Absolutely.